I say the E-mini Power Hour. Welcome, 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 one and all, to Explosive E-minis. Let's go ahead and make sure you guys can hear me. There you go, Jim. If you would put the number 1 in the text box, or the questions box, I should say. 1 means yes, 2 means no. I would greatly appreciate it. Nothing worse than talking to myself for the next hour or so. Always helpful when someone else can hear you. Very, very good. We have an absolutely packed house this week, guys. The suggestions came in from some of you that are regulars here saying, well, we talk a lot about E-minis. I wish Rob would show more on it so we could kind of follow along and have a good understanding of it. And we put out this Explosive E-minis class for today's Power Hour, and we've got a lot of interest in it today. So we've already exceeded what we normally do, and we just opened the workshop up. Some of you are very excited to get started here. I saw a bunch of no voices yet and such. So I'm glad you guys were able to make it here. How you doing, Daniel? Good to see you, sir. Let's see, Mr. Tom, bunches of ones. I do appreciate it. Excellent, excellent, excellent. Very good. So, guys, Power Hour, normally we start off, and we're going to get into disclaimer, obviously, because I know how much you're waiting for that with bated breath, no less. But normally we started off by talking about the candidates that you guys want to talk about. Well, today we're going to do it a little different. We're going to talk about one type of candidate, which are mini-sized future contracts. And for any of you that have been through you're welcome, Butch, any of you that have been through the Rob's reboot that I do, I break down into 3 different categories the way the market works. The E-minis, or the way that you should be using the market, in my opinion, the E-minis are one of them. We'll talk about that briefly today because I really do want to try to delve in to some of the basics of this to give you a little bit of a better understanding on how they work. So first thing we're going to do is let's take care of that disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. Hey, I got it right this time. Excellent. Because I don't usually say that, right? Okay, cool. So, guys, in Rob's Power Hour, in Rob's reboot, when I do my reboot program, I talk about 3 avenues of generating income. One of them is to utilize the E-minis for the pay the bills. And that is, in my opinion, the way that I think these work best. They are not long-term holding positions for most traders, and a tremendous reason for that is the margin requirement to hold overnight. We'll get into the hours, the overnight, and what all that means. But basically, instead of having about $500, and it depends on your broker, anywhere between $500 and $2,000 you'll need per contract, instead of having that minimum, you're going to need closer to $5,000 in order to do so. So it makes it a little bit more difficult to use this as a vehicle you hold overnight. To me, these are great intraday vehicles, and again, there are tremendous benefits to using them, which we'll get into as we go through. But I want you to think of it this way. I want you to look at it as if you were able to know that every month you were able to take care of your day-to-day expenses, your bills, right? You were able to live your life without fear of how am I going to pay the electric, how am I going to pay the gas or the mortgage, the rent, put food on the table, clothes for my kids, and so forth. And even, even a little bit of enjoyment in there. I'm going to go to a movie, I'm going to go to a play, I'm going to go on a trip once in a while, where your basic necessities were covered. If you could take care of that, and they were all a non-issue, think of the different place you would be in your life day in and day out. Think about it. There's a commercial on TV in New York here, where, and I won't tell you who the commercial is, but it's a woman and she's walking in this beautiful garden with this big pond in the middle of the garden, white pillars all around, just very ornamental, beautiful setting. And she's sitting down on a white stone bench, and as she is, she's talking out loud, and she says, pizza. It's round. They cut it into triangles, and they put it in a square box. And at that point, she finishes her sitting, and then the announcer comes on and says, what would you do if you won Lotto? Or, I'm sorry, what would you think about if you won Lotto? Right? In other words, she doesn't have anything to worry about in her life. She can do anything she wants. Right? Excellent. Well, that's kind of what I'm talking about, guys. And I don't mean just nutty and go spend $1 million a day, not what I'm referring to. Just understanding that you can take care of your bills day to day. That's the way that we use the E-minis. That's the way that I use the E-minis, and I think that it makes the best sense for you too. So let's see. So Drea said, so are you saying for day trades only, never carry overnight? I do not carry them overnight, Drea. That is correct. I am in and out of my trades fairly quickly. Sometimes they will last a good part of the day. And Drea, that's the great part about being, so Drea says, unfortunately stuck with a job. Drea, and if I'm pronouncing it incorrectly, I apologize, Drea, but the wonderful thing about this is it trades 22 3/4 hours a day. So, Drea, what are your hours at work? What time do you leave for work and what time do you get home from work? Because unless they happen to be a very specific 1 1/4 hours of a day, you can trade these all night long. And that's one of the greatest factors about this is we can trade these in the evening. So yes, I do. So 8 to 4 Eastern Standard. So Drea, I know you're right there on the U.S. markets when the equities market closes. But here's the thing. The futures market for the mini-sized future contracts, and that's what E-minis are, by the way, mini-sized futures contracts. The way that they work is, the way the hours work is they started yesterday, last night, Sunday night. They opened up at 6 p.m. Eastern. They will trade all the way until 4:15 p.m. Eastern today, and then they will halt for 15 minutes. In other words, 4:15 to 4:30, it's a halt. It's not a shutdown. It's a difference. The halt is just a place for them to go in and to readjust prices and make sure everything is the same. Right? Yes, Joanne, we're still on the disclaimer screen. Haven't changed anything to this point. Then it'll open back up at 4:30 and trade for 30 more minutes till 5 o'clock. At 5 p.m., they shut the market down for 1 hour. That is the overnight session. That's our overnight session. That is where you run into the overnight margin for the 1 hour. So Drea said, would you suggest learning the regular market, then do the E-minis? Drea, you're going to find out, which there are so many people have gravitated to these at BetterTrades, to the E-minis, and the reason for that is there is less complexity here than there is in the options markets. I don't have some of the same things to be concerned with that I do in the options markets, which is awesome, right? In the grand scheme of things, understand I don't have to worry about things such as delta. I don't have to worry about theta. I don't have to worry about implied volatility. I don't have to worry about, you ready? You ready for this one? The day trading, pattern day trading rules do not exist. They don't count. Not in this market, they don't. You need $2,000 to open your account up with the broker that we use through eSignal. You're welcome to use anybody you choose. You need $2,000 to open the account. That's your minimum. And as long as you have money and you keep hitting enter and you haven't lost all your money, you can trade this 100, 200, 2,000 times in a day, 1 million times in a day if you can hit the buttons that fast. Butch says, yeah. Drea's asking, does Tradier do futures? Not at this point, Drea. They say they're going to, but they haven't brought them on just yet. So hopefully they will shortly, but not today. We use a different broker, and I'll show you the slide for them. They're called Trade Pro. They're also connected right into the eSignal platform, but it is a different account that you're going to open. Debbie, good to see you here, dear. Yes, you do have to know charting. That is correct, Debbie. And Debbie trades the E-minis, guys, and she's in the E-mini Trader Talk with us. To be successful at any trading vehicle, whether it is options, stocks, bonds, futures, forex, it doesn't matter. You need to be successful at charting. You've got to be good at charting. It says, really sounds too good to be true. I know. But go back to Debbie's point, you still must know the charting component of it. So Scott's saying, in today's day and age, day trade rule is kind of silly anyway, right? It is, Scott. It's very silly, but it's Big Brother. It's the government, watching over us, saying, okay, we want to make sure that you're doing the things you're supposed to do, that you're not getting out of line. So we're going to watch you. Donna says, Rob, they don't shut down the market for 15 minutes before the close at 5 end of day. Don't they? Okay, I'm sorry. I read it wrong. Don't they shut down the market for 15 minutes before the close at 5 for the end of the day? The 15-minute shutdown comes at 4:15, Donna. So 4:15 to 4:30 is the shutdown. And actually, watch. I'll bring eSignal up, and I'll go to a 5-minute chart, and I will drag this back to last week. So here we are. Actually, let's go one more day. All right, so here we are last week on 12/9. Right, so here we're on Wednesday, okay, of last week. So you can see all the big volume here. That is the normal trading hours of the market right in there. So if we look, this dotted line right here is the shutdown. See 1600, if I put my mouse here, actually let's do it this way. Let's make it a little bit bigger so we're not congesting it up there. All right. So 1600 is right on this candle. That's the regular hours, the regular market's close right there, right? Then you go ahead, you look here, 1610, and then the next candle is 1630. So 410 is the last 5-minute candle. That's the start of the candle. It closes at 4:15. The start of the candle here is 4:30, 1630. And then we go 40, 45, 50, 55, 1800. So basically 1700 to 1800 is where the hours open back up again. So Donna, that's where it kind of works out. Debbie, Joanna is asking how you're doing trading the E-minis. How about this? Let me ask it this way. Have you learned a couple of things, Debbie, in the E-mini Trader Talk over the last couple of weeks since you started out there about trading them? Brian says, if it goes against you and you don't have a stop, it could clean you out. Well, Brian, anything goes against you without a stop, it could wipe you out, right? Here's the thing. When you put $500 of margin up, if it goes against you by $500, basically the broker's shutting you down, because they're not going to take a chance that you lose their money. They're going to let you lose your money. But I think for any position, it's a valid point, Brian, but any position we trade, we definitely need to be responsible for what we do. What do you mean no options are limited? Do you mean there's no limitations on what I can do as far as exits, Brian, if that's what you're referring to? The really cool thing about this is it's very open-ended, and there's a lot of options that I can use here. So as an example, can somebody tell me the disadvantage to using a trailing stop on an equity option? And while you guys are answering that, so Drea is saying, do you do a separate account trading E-minis and other accounts for options, etc.? Yes, Drea, you're not actually allowed to have this one account for all. There's only one broker that I know of that does it, and every other broker you talk to says it's illegal by the way the SEC documents are written, because of the way you've got to convert whatever monies you are, whatever exchange you're trading in, you've got to convert to that currency, and you can't do that in an equities account. So everybody else has separate accounts. So Joanne, Debbie answered back, yes, between Rob's think tank, you guys will notice the slides said Trader Talk. It's an older slide set that I just took some of the slides off for today, but we now call it a think tank. We no longer call it a Trader Talk. It's a think tank. Yes, between Rob's think tank and the many contributions from students and my trading buddy Francis, it is phenomenal. So there you go. So Brian says, if I buy a $90 call and the stock drops to 62 cents, I can only lose the amount the option cost me. That is correct, Brian. And if you drop the $500, they're basically going to shut you out on the E-mini. But here's the other part of it, Brian. Let's say you spent 90 cents on the option and the stock goes in your direction and you didn't have a GTC in there, or it didn't fill, or whatever happened, and that stock goes to 1 penny in the money, and that's on a $100 stock, and you bought 10 call contracts. You basically would have to come up with $100,000 of cash to buy that stock on Monday. So once again, it's being responsible, whether it's options, futures, Forex, it doesn't matter. You need to be responsible in those positions. You're welcome, Joanne. All right, so Dominica said, are there any additional limitations for Canadians for trading E-minis? Dominica, these trade worldwide on the Globex, so I don't believe you're going to have any specific restrictions to Canada at all. Drea said, you don't do Bollinger Bands on your charts. I do not, Drea. I use Fibonacci's, moving averages, and I'm more of a technical trader with fewer indicators. It doesn't mean Bollingers don't work. There are many of my students that are in the E-mini think tank with us that use them. And if it works for you, that's great. They're a phenomenal indicator. You're welcome, Dominica. All right, so guys, let me bring you back into this presentation for a little bit. Now, I'm going to start off with the Dow, not the S&P. All right? The Dow's base symbol is YM. YM. You see where my mouse is moving right there? That is the base symbol or the root symbol. Now, what that means is there's more pieces or components to the symbology than just that. Now, by the way, since, and they have not updated this yet on their website that I saw. Anyway, I looked last week. These hours have changed, right? So it's still, you know, the trading halt of 3:15 to 3:30. And right now, right, till 4:15, and the shutdown is 5 to 6, and that's Eastern time. Right, 5 to 6 p.m. is the Eastern time. These are Central time. 3:15 to 3:30 is 4:15 to 4:30. All right. So the YM is the base or the root symbol, and then you have two other components that make it up. You have the month code, the contract months. There are 4 of them: March, June, September, December. So here's the way I want you to remember that. Write these down. H, put a hyphen, M, U, Z. And I pronounce it HMUZ. HMUZ. H is March. Everyone after that is 3 months away. June, September, December. So what happens is on eSignal, the symbol is YM, and then there's a space. It's not an underscore, it's a space. And H is the current contract we are using. We just shifted over today. 6. And that 6 is for 2016. We were using YM space Z5 up until Friday of last week. Right, HMUZ, Steve, exactly. HMUZ. HMUZ, right, Steve, yeah, the first one you put UMZ. HMUZ. I just put the hyphen to break it up, HMUZ. I tried the mz, but it didn't work very well. I couldn't remember what that was. So HMOS worked extremely well for me. Let's see. Daniel said, personally, I think it's an easier way to manage the trades on E-minis than equity options. Executions are smooth, and with most 1 to 2 point slippages, where with options you are consistently at the mercy of the market makers, having to adjust the spread. Guys, I will tell you this without a doubt. There is absolutely no question, unequivocally, that E-minis is an easier position to learn, and in my opinion, safer than an equity option when you learn the rules. Paulo's saying, where do you switch from 1 month to the next? Basically, Paulo, it's last Thursday, expiration Friday for options, and this is where it becomes nice and easy for you guys. Expiration Friday is this Friday. The Thursday, the week before, when they would write a normal weekly option, right, not the continuous or the multiple weeklies. So right now, the 18th is expiration. Last Thursday was the 10th. On that day, Paulo, is when you start to look. It didn't make sense on Thursday. It didn't make sense early on Friday. This morning, it made sense to switch. Debbie's, okay. That's good, Debbie. You're welcome, Paulo. Joanne says, easier, I'm in then. Yeah, I understand. I mean, to me, they are easier. Debbie said, I made money last night watching the Packer game. Big smiley faces on her email, her text message in. So guys, and that's the really cool thing is you can set this up on a laptop. We have one of the students in our E-mini think tank that he has alerts set in the evening. They go off at 3, 4, 5 in the morning, whatever time that happens. He gets up, places his trade, rolls back over, goes back to sleep. Right? He calls it the insomnia trade. And I'm not saying you need to trade it that way, but the cool thing is you can. And that's really what it is. I hate someone telling me, tough noogies, I'm stuck and I can't do what I want to do. Right? Now, the S&P 500, guys, actually, let me finish here first. So every 1 point the Dow moves, it's equivalent to $5. See, that's the cool thing. Let me ask you this. Can anybody give me an answer? If Apple were to move up $1 today and my option has a 70-cent delta, how much will I make on my option? If Apple's stock moved up $1 and I have a 70 option, how much will I make on my option? And you guys give me answers, and I see the answers coming through. Now I'm going to ask it a little different way. The answers that you just gave me, are you guaranteeing me that's what I'm going to make? Or not what I'm going to make, are you guaranteeing me that's what the option is going to be worth? And the answer that came through was 70 cents, and I get it. So Scott says implied volatility could be a factor. Yes, absolutely. Delta could change. Implied volatility drops. The bid-ask spread changes. What I'm saying here, guys, is this. If we look at a position right now on the YM, and we're getting a little bit of a pop to the upside, it's at 17,194. If I were in a bullish position and we moved up to 17,195, I'm up $5. Right? Yellen could speak. You're right. It's coming out. You never know. I'm up $5. If it goes down by 1 point, I'm down $5. That's it. Now, there is something called slippage where, let's say you had a 10-point stop, which means basically 10 points times $5, $50 at risk. Okay. If I have $50 at risk and my stop triggers, maybe I don't get out at $50, maybe it's $55 because the bid-ask spread opened up a little bit. But you are not going to be at you are with a Priceline or a Google or an Amazon where you could be $1, $2, $3 difference of your bid-ask spread and get your head handed to you. Right? Now, not the time I would want to get in the trade. I'm just going to enter one just for the sake of, let's put a trade on so you could see what we're doing here. Right? So I bought this position right here, and we're basically up $10 now. Now we're down $20. Boop, boop. If you hear that swoosh, it's my favorite sound in the world. Right? That's my trailing stop kicking in. So I'm out of that trade and I made $10. Now, again, I didn't do the trade at the right place. That's not where I wanted to do a trade. It's just, here it is at 20 minutes after, and this is where I got to a point of let's just hit the button and place a trade. But we're up $10 in there, all right? So we did 2 contracts. Every 1 point that the Dow moves, notice 17,218 is where we got in. 17,219 is where we got out. We're up 1 point on 2 contracts, we're up $10. Now, we didn't make any money on $10 by the time you pay commissions. What I'm looking at is the ability to place the trade, and if it moves 1 point, you're up $5 or you're down $5. That's all it is. Let's see. Victor said last week, mentioned you agreed that there was also asked about the fibs correlation. I found it interesting on a 5-minute chart on the second V. I saw a correlation even at the close or near the close of the day. Victor, you talking about last week in Power Hour or last week in the E-mini think tank? DC Jim says, you could even lose money. Happened to one of the coaches. Yes, you can get your head handed to you on any position. But that coach that you're referring to, DC Jim, or that trader, did not know the rules. And they placed a market order with a massive number of contracts in a position they never should have done it on. Victor said, also double tops before the drop to follow. Okay. So, Andrea says, does this do the opposite on the regular markets as far as direction? What we're looking at right here, Drea, is the Dow. We're looking at the Dow. So it's what it is, the market. We're trading the Dow. We also could just very easily go ahead and trade the S&P 500. It's the ES. Just like the Dow, a little different movement, but it is the ES is the position. I am a big fan of trading the Dow. That's the one that I do prefer. Let's see. Daniel says, Rob, I'm destroying it right now. My cross has me up 80 points right now on the last two that took 35 on the first two. So what Daniel's referring to is he did 4 contracts, and on the first 2 contracts, let me just grab a calculator. It'll make life a lot easier. Oh, wrong one. So basically, Daniel had 2 contracts, and he was up 35 points on those 2 contracts. So the first 2 contracts he pulled out is $350 was the profit. He has 2 more contracts right now. He's already got the $350 locked in, and he's up $80 right now on those. That's $800. That's one trade, $1,250. Chad says, well done, Daniel. Yep, kudos for sure. That is fantastic. Let's see. Joanne says, this sounds more stable than options trading. It can be, Joanne, absolutely. What did the 4 contracts cost, Daniel? Don't need to ask him, Joanne. It cost him $500 a contract is what he had to have to do that trade. $2,000 to do that trade. Right, Brian. Keep the losses small and let the winners run. You're exactly right. Tria says, this is quite interesting, and I have stayed away from this because I wanted to remain focused on options. So, Derek, I think you got it. I think I answered it before, but $2,000 is what was in the trade that Daniel did. Joanne, you're welcome. What is the cross, moving average cross? So, excuse me. The moving averages, and there's various systems that we teach now. Now, guys, I just wanted to show how we lock a profit in right before. If you look here, we took $10 at 19 points. Right now, we're up to 29. That's another 10 points higher. That would have been an additional $100 had we just left it alone, right, on top of the $10. Again, I just wanted to show you an in and out, so we put a trade on. So the moving average cross, Daniel's got a system. I've taught moving average crosses before. Many of the students in the E-minis think tanks are using them now. But, you know, an example is right here, right? Here's a moving average cross, and we're looking for other keys. We're looking further back on the chart. We're looking for support and resistance areas, what's going on, where, and so forth. And those moving average crosses, when done at the right place, can be massive as far as the profitability potential on Andrea. So Andrea says, so using this chart, the entry would be the green candle bouncing on the yellow line, correct? Well, one of the examples, Drea, is the pink line crossing up through the yellow, and either you take the breakout of it or you wait for the retest and the bounce to take it. That's going to be a personal decision, a personal choice on which way that works best for you. Daniel says, right, the cross with location is the key. It's not just the cross. Debbie just typed in, guys, just made another $50, Rob. Booyah! There you go. And yes, I can say that being from New York. So, excellent. Congratulations, Debbie. That is awesome. Drea says, I'm so jealous. Well, it's not a matter of being jealous, Drea. It's real simple. Guys, there are tools available that you can use for this. You know, realistically, it's a great education to sit in the Trader Talk, the think tank, with us one night a week on Monday nights. But, you know, the better way is to get that hands-on education, as we're going to be doing it all day long. And there's a live workshop coming up in Chicago in January. So a one-day workshop held right at the CBOE, the Chicago Board of Options Exchange. Let's see. Looks kind of topsy now. Yeah, and why does it look toppy right now? That Debbie had typed that in. Look what's going on. Where are we? Right where we failed multiple times today. We've got to get through that. If we don't, we're looking at a potential reversal. Patty says, way to go. Shooting star? Potentially. Let's see. Drea said the wicks. Yes, absolutely. I mean, and you get them once in a while. You're going to have that. But those tops where it's just topping out there, it just seems like it's starting to fail. Bigger W, right? Let's see. I missed a couple in there. So, all right. So I think I got all of the questions. All right. So Skip, I know I missed something. Interested in your take on price line as well, whether you get a movement. If we get a chance, Skip, we'll take a look at it. All right, so let me take you back in the presentation. All right, so every 1 point the Dow moves, $5. That's pretty much it. Will I show you my order entry with my stop setup? Butch, all I did on this particular example is I have a 2-contract order with a trailing stop TS of 15. That's all I did there. So, guys, I'm not saying it's going down here. This is a pivotal point. It would not be a place to just jump in. But I'm going to put this one on. I'm going to leave it go. Right? So I'm going to sell this at market. 2 contracts, trailing stop of 15. Again, not where I would want to do this trade at all. I'm going to leave it go and see what it does. The moving average is right here. Way more risk than I want to take on. But, again, just to show how it moves, and I'll kind of leave it set there as we talk. Which, let's see. Right, Debbie says she trades off the ladder, and the ladder is what I call the dome right in here. Right, and you can see the bid-ask spread. You can see 4 on the bid, 1 on the ask, and it's changing. But when you see the black space in there, that is when the volatility is opening up a little bit. So, guys, look, we're up $60 right now on this bearish position. $40. And some of you are freaking out saying, oh, my God, I just want to get out. 30. Oh, we're break even now. It's okay. It's only a non-funded trade. We just did it as an example. All right? Again, wrong place to do it. It was just one to show the example. We're going to leave it go. And at worst case scenario, we'll be hit with 15 points at $150 on 2 contracts. That's what you're looking at when you enter your trade on Amazon or Google without a question. Let's see. So Drea is saying, why is it better for paying the bills versus the options? Paying the bills, is that because of the hours? No, Drea, actually, I like it better for paying the bills because it gives me an opportunity to trade options longer term, where these are going to be short term. My options are more of the longer-term saving for new furniture, new tires, a roof on your house, a car, a house. That's where I look at options trading for. Whereas for the E-minis, I look at them more for the shorter term, the in and out. So right now, guys, we're up $80 on this position. Let's see. Well, if I got out right now, Butch, we're up 20 bucks, 10 bucks, 20 bucks, $10, right? It's kind of vacillating. Again, was this the right place to enter the trade? No. Right? Now we get another push down, guys, and we get it near 60, 80 bucks. I'm going to click close in a heartbeat and take us out of that trade. Just because it looks like we're going to pop at this point. Let's see. Right, and Debbie said the latter might be easier for some of you to trade off of, and it's a personal choice. All right, so we got stopped out there. All right, and what happened was because of where we got in and where the trailing stop came down to, we got taken out and we're underwater $50, and that's total $50. That includes the $10 we were up before. So that trade went against us by $60. So we sold at 14 and we bought at 20, $6 is what that trade, 6 ticks, right? 6 times 5 is 30, times 2 contracts, $60. Right, Daniel said we had a dark cloud cover over there. Yep. Yeah, Butch, I would have done a manual stop out. You know, just, again, the bounce of it, and I'm going to bring it back to where it's more of a normal size, guys. It's kind of hard to see it that way. But normally you're going to let it just go, right? The only reason of this is we've got the moving average there. There's the potential of bouncing off of. And Debbie says, I don't set the stop when I'm watching this. I just sit there and watch it. Is that wrong? It's not wrong. Debbie, I might not have put that stop in, and if I was not talking, and I'm looking at 2 different screens. I've got my text chat on another screen, so I'm not even watching most of the time what it's doing at that point. But you can see we're still pushing right back down to where we were. Let's see. TS15, Butch's trailing stop of 15. So I have a TS20, a TS30, a TS50, and I just pull that one in. Well, it's not that I don't use targets, Anthony. I will use targets, but in many cases, in this example, it's a lot easier just to use a trailing stop and show you the ability to do so. You can't do this on options because the option trades in most every broker off of the last price, not off the bid and ask. So you do it, and even if it does, and the market maker manipulates implied volatility, you can get crushed. So Drea said, why does the trailing stop have to be so tight? Well, it doesn't have to be. But in this market, I didn't want to give it a lot of wiggle room. We're at lunchtime. But remember, a 50-tick stop is $250 for one contract. 10 contracts is $2,500. So your stop can be as big or as small as you want. Now, the ES is the S&P 500, guys. It works the same way, except the ES trades on 1 quarter tick, right in here, with $12.50 for every quarter tick. I don't trade the ES very often. I tend to trade the YM more. You can trade whatever you choose, right? I'm not a fan of the ES at times because of buy-sell programs, which I don't have that happening the same way in the YM market, in the Dow. And guys, if I missed any of your questions, please, by all means, type them in again, because I can tell you right now that there are about 400 comments and questions right now in my text, /chat box. Debbie said, love the YM. Me too, Debbie. It's my thing. I love it. I love trading it. Most of the traders that are in the E-mini think tank with us at night are trading the YM, not the Dow, but you can trade anything you choose. So Paulo said, is the trailing stop a dollar amount or a $15 or a percentage value? Paulo, the 15 is a tick. So 15 points is how I have the trailing stop set up. All right, so Dominica is saying, how much overlap is there between the ES and the SPX? Dominica, when you look at CNBC before the market opens and it's showing you the S&P 500, it is the ES. Once the market opens, it becomes the SPX. So they're the same contract at certain times of the day. Because the SPX trades in our market. When our market opens, it's still everybody else's Globex. Everybody else around the world is trading ES. We're trading SPX. So there is a confluence between them. I appreciate it. Ed says, thanks, Rob. Always get great information for trading the E-minis every time I listen to your class. Yes, Paulo. So in dollars, 15 ticks times 5, 1 point is $5. 5 times 15, $75. You are correct for one contract. So Drea said, do you need a special stream for this, right? You need to have the exchange data. So Drea, if you're using eSignal, you can get the exchange data for $3 per exchange. And there are two that you need. The CBOT, which is right here, CBOT, and the CME. CME is the S&P, CBOT is the Dow. Yeah, so Butch said the ES is at 2001, the SPX is at 2010. Correct. So they're never going to ever be exact, Butch. Good point. They'll never be perfectly exact. They will be close, but never exact. So you do have to have some other data for it. They're $3 per exchange right now. All right, so the contract rollover date, I talked about that already. That question came up before from Paulo. When do we know that the contract is rolled over and now it's time to change contracts? If you just look at the options expiration date, and let me see if I can't grab this. Just give me a second there. All right, so let me pull this down here. I just went to Google and got a calendar, right? And it's just, I put in May 15 and 15, and that's what I got. So on the third Friday of the month, right, this is expiration date right here. Now, your options expire at 4 p.m. Eastern on expiration day for equity options. Your futures contract, the Z contract, the December contract, expires at 9:30 in the morning on the 15th. And then the H takes over automatically. So on this date right here, the 7th, RO for rollover. That's when the contract actually rolls over. Now I go through and teach some more advanced techniques to, just because it rolls over doesn't mean it's the one I want to trade. Actually, in many cases, it's the dead wrong one to trade by just switching on that date. Let's see. All right, so Scott, I didn't see that question, Scott. When you say a manual or a tutorial for newbies that need to get them up to speed on for the rest of your students, where were you referring to that, Scott? In the E-mini think tank? All right, so Daniel said, Rob, I just took 20 points on that dark cloud entry I typed in earlier. 20 points. How many contracts did you have, Daniel? 4. 4 contracts, guys, with 20 points. What are we looking at there? I pull this in play. I don't know if it's going to, yeah, it's not going to let me write on it. So let me do this. 4 contracts at 20 points. There's $400 while Daniel's sitting in here. All right? That's pretty cool. So, Scott, I don't have, in the archives, I don't have a manual per se on the E-minis, but there are different PowerPoints up there on the basic presentation we went through when I first started teaching the E-mini Trader Talk. And the videos of all of those are in there as well. So it's not specific where there's just a manual, but there are the PowerPoints along with the video that I took of them. So yes, they are available there. Oh, I agree, Scott, to lay the foundation. It makes life easier. And guys, that's kind of what I'm trying to do with this Chicago class coming up. I've had so many people say, Rob, you need to show this stuff. You need to do it live. I want to be there and watch you do it. I want to be able to sit with you. I want to watch as you place those trades. I want you to teach me how, when, where, and why you use a 20-tick stop versus a 50-tick stop, how your crossover works, how your rectangles work, and so forth. That's kind of what we're going to get into when we get into Chicago for that one-day event. All right. I think I got all the questions in there. So let me pull that and that back out of the way. Debbie says, yes, everyone who wants to learn this should be at Chicago. I agree. I understand Tampa's warmer for the winter, Butch, but, Bill kind of sideswiped me and said, oh, yeah, you should do this class in Chicago. We could tie it around the Chicago Next Step event. I said, awesome. He goes, great, we'll do it. And then I found out it was January. And Debbie said, it's 60 there today, and I guarantee it's going to be 60 there in January, too. I hear you, Butch. I hear you. Let's see. All right. Here's the thing. We stay in a hotel that's 2 blocks away from the SIBO. You can get a taxi if you don't want to walk, but it's 2 blocks, guys. For one day, take the taxi right from there back to the airport. Don't fret over this stuff. Don't let that stop you. At least 60 here in the room. Yeah, there you go, Robert. Don't let that freak you out at all. All right. Guys, here's the information on the broker that we use. It's called TradePro. Now, if you have an account with eSignal, if you have eSignal and you have it through BetterTrades, if you don't have it through BetterTrades, you want to call our office and talk to them and say, how do I switch to getting my eSignal account through BetterTrades, and they will help you with that. But there's a $2,000 account minimum required. If you're not with BetterTrades, it's $5,000. There's $500 margin. If you're not with BetterTrades, it's higher, and that's per contract. And it's $4.52 for your round trip commission. If you're not with BetterTrades, it's higher. Now, you will find some lower. I had someone last week that was at $10 round trip with a different broker. A major, what I would call discount broker was $10. And they got it negotiated down to $8 round trip. So $4.52 is a pretty darn good one. Daniel said, can't say enough good things about them. Yeah, Trey and Shelly, they do a fantastic job. They really do. They are just great people and great to work with. I've been very impressed because I call up and, I pretend to be a student when I first started talking to them, and they don't know who I am. And I want to see how – I don't want them treating me better because, oh, yeah, no, he's the decision maker at BetterTrades, for this. And, I don't want to have the wrong relationship or conversation, so I'll bend over backwards. I called up as a student, did not tell them who I was, and watched them bend over backwards instead. So let's go back and look at so guys, look at that fail. Great move down, good push to the downside. So, Scott, I don't know. The question is, if someone were temporarily unemployed, will brokers give us any issues with getting a margin account even if we have excellent credit? I think the credit's going to play a much bigger part of it. And Scott, I work for myself. So, basically, I am unemployed, right? I'm not working for somebody else. I have my own business. This is what I do. So I'm going to say if you've got good credit, you shouldn't have issues. Now, bad credit can cause some problems, period. That definitely can be an issue. So it's a matter of working with the broker. But I will tell you this, Scott, these guys at TradePro and Tradiera, I don't care if you're using either one of them, they are huge in what they'll do to help you. No, Demetrius, I am not an employee of BetterTrades. Never one day have I been. I am a contractor. I do not work for BetterTrades. Never have, never will. Don't want to. They hire my corporation to send a representative to teach workshops. Yeah, I am basically unemployable at this point in my life. No one's going to want to hire me to do a paid job. No, Butch is saying that he used a different broker. Is that a problem to trade with me? Absolutely not. Butch, you're going to want to check their commissions because that's who I believe my student was using who paid the $10. So you certainly want to make sure you can negotiate that if at all possible. Yeah, Dre, as a contractor, I'm paid well. I'm not paid a salary. Unemployed with dignity is self-employed. You got it, Dennis. You got it. Tradiera is equity, Scott. TradePro is the futures. So, guys, I want you to look at something here for a moment. And, again, we got stopped out. I just threw the trade out there, but we sold at 214. We made it down here to 167. That's 33, 43, 50 points. It's about 50-point move that we made to the downside to the bottom. By the time we bounced off of the 21-period moving average, it's about a 50-point move. If you did 4 contracts, which means you had $2,000 to do so, If you had a 50-point move, it's $1,000. Drea, you might be able to get the E-minis on extreme charts, but you would have to pay for separate exchange fees, and they would be real-time exchange fees. Guys, I will tell you this. I do not know one professional trader anywhere that uses extreme charts for their intraday data. There's a reason that you can't update your end-of-day data until after 7 o'clock at night Eastern, and that is because it takes them 3 hours to clean the data. Well, if they have to clean the data at 4 o'clock, I'm going to guess that you're going to find that the data may not be as clean as it could be at 2 o'clock. So I'm not going to use it for my intraday trades. Daniel said, yeah, I should have traded it manually, just a 20-point target. We're trading at the 12 to 1 time frame, so better to take a profit when it's there. Oh, I agree, Daniel. I agree, 110%. Right? Yep, you're right, Donna. All right, so let's go take a look. And guys, here's the thing. Some of you may look at this and say, Rob, that's a lot more money than I want to risk at this. You know, I think there's risk, and I've heard some of you say that already today. I think there's risk in this, and you know, maybe I don't want to do this because of the risk. Tell you what. Now the market is closed. This, who was that I had there? Euro. Yeah, the that's because we need to get the Z's in there. Let's see. So let's go ahead and make this the H6. All right, that's better. Otsimo better. Haven't looked at the micro contracts yet. Guys, this is the mini-sized Forex for the euro. What that means is, and I'm going to put a trade on here right now. Right now, I'll put the same 15-tick stop in there for right now. And again, let's see, sell market, beautiful. So I did this trade right now, 15-tick stop, and right now I'm underwater $2.50. It moves down 1 tick, and I'm at break even. Why? 2 contracts, every 1 tick is worth $1.25. If I were wrong and this pops all the way up here from 1049 to 1069, those 20 points, it would be 20 times $1.25 is what I would be underwater. The greatest thing about this is those of you, and I know there are some, and if you are one, go ahead and give me a 1 in the text chat, but there are some of you that are going to go ahead and trade it real whether you are ready for it or not, because you don't feel non-funded trades is the right way to go. And I'm going to, and Butcher's like me, number 1, first one in there. You can do this trade, and if you're wrong by a 10-point move, you're underwater at $12.50. Robert said, if you want very little risk, put your money into the bank and it won't keep up with inflation. Actually, your money will be in deflation. You're right, Robert. So, guys, right now we're underwater $2.50 on this trade. If I'm right, we pushed down, broke the moving average, came back up to it on the moving average cross, and failed nicely. We came back to the moving averages and failed again. If I am right and we get a push to the downside, that push is going to make it down to 44, another 5-tick move at least. And then we're looking down here at that 26 level. The nice thing about this is once you learn how to trade the micro, you can then trade the full euro contract for very, very, very small risk, similar risk to the S&P 500. More than this, but still much less than trading any equity option on any major stock. Well, Steve, that's a very valid point. He said, tell them this is America. If you don't want to trade it, then don't. There you go. Right, so we dropped off that yellow moving average, which was the 21 EMA. I've got 8s and 21s up on here, or the 2 different moving averages. So, guys, all of this stuff I'm talking to you about today, all we did is brush the surface. You saw the plethora of questions come through. Daniel says, I highly recommend E-mini futures. It has made me a better trader overall, not just futures, but equity options as well. What you do on futures transfers very well to equity options. Guys, I couldn't say it better. Daniel has traded equities with me for a very long time, and he's a good trader. He's become a great trader since starting in the E-mini No Longer Trader Talk think tank. When did you start it, Daniel? It was May, June or something? When did you start with us in there? April. In April. So, guys, we're up 250. We're break even right now, right? Let's see. Drea says, do you really think it's worth paying for a trading platform when so many are free? E-Signal. Yes, Drea, I do. Because there are major benefits to this over some of the other trading platforms. And, you know, if you get me at a live event somewhere and you got time and you want to talk about it, tell me who you're using and I'll tell you why I think there's better. You know, some of the free ones that are charging $10 for commission versus $4.52, you add those up, do one trade a day at 10 contracts, and it adds up really quick for the cost. God bless America, Steve says. Futures are also a very good hedge. They're an excellent hedge, Steve. Steve, you're trading these very heavily, aren't you? Ed says it pays for itself. E-Signal pays for itself in a week. Amen, brother. I agree, Ed. So, guys, all the stuff that I'm teaching, all the things that we're going through here are things that we're going to cover in the 2-day live event in Chicago. I'm sorry, 1-day live event in Chicago. And it's on a Friday, but the reason I said 2 days is because we're doing a next step right before that. Guys, the 1-day event is called E-Mazing E-minis. We're going to go into the Chicago Board of Options Exchange and we're going to trade. And I'm going to teach you how to trade. I'm going to teach you what to trade. I'm going to teach you how to effectively do these things. So you've got Yellen coming out this week. Guys, I'm going to tell you right now, I'm going to teach you a strategy in Chicago on how you can take advantage of a chicken trade type setup on the futures contracts and trade both sides of the market at the same time, anticipating, waiting, watching to see where it's going to go. Holy mackerel, we're up $5 now. Small money in the trade, guys, but small risk in this trade. We're up $10 on this contract right now. And if we break, we've got another 20 points to drop to the downside there. All right? So here's what I'm going to do. The workshop itself is normally $1,595. At this workshop here today, because you spent some time to learn this, and you'll see the pop-up in your My Account page, you'll get an email about it, is $1,295. But with that $1,295, guys, I'm going to also have you come to the 2-day next step for free. The next step is Wednesday and Thursday right at the SIBO. So we will spend 3 days together in the Chicago Board of Options Exchange. You will learn how to trade these things. You will leave there an E-mini ninja. When you walk out of there, just, you will have a very good handle, a very good understanding, a very good take on how to take advantage of the markets, how to use this for the pay the bills type strategies, and how to kick, tail, and take numbers in this marketplace. Debbie, it is $1,295, and that includes the 2-day next step event. So Robert said, you pick different contract expiration dates, one short and the other long. Yeah, I'm not going to expand on it, Robert, but the answer is maybe. You could, but there are ways to do it with the same contract as well. So yes and no, you know, depending on what's going on. So guys, we're up 15 points on this, $15 on this right now. It was a great setup. I'm going to ride this one down. I'm not pulling this out. I got a trailing stop. The cool thing is I can walk away. Steve said, Rob, I also trade options in stock. Futures are good. You just have to make sure that you don't overtrade and take small losses and let your winners run. And that's on anything you trade, right, Steve? So that is awesome. You're welcome, Robert. Absolutely no worries whatsoever. So, ladies and gentlemen, there you have it. When you're done, you're going to see the pop-up, right? If you look in your chat box right now, the admin put this little pop-up in there for you, right? You're also going to get an email with that same pop-up. Guys, I just want to take it off the screen so you can see, but we're up $17.50 right now on this trade. Right? So when you come in here, you'll open up to the BetterTrades page. You'll see the Next Step Workshop in there. You click on My tab, and there's the E-Mazing E-minis class right in there. Right? Go ahead in there, log in, get it done. Just call the office if you want to go to the next step. If it doesn't do it automatically, I don't know if we can. You may have to call the office and say, hey, I want to go to the next step. Rob said if I get it here, I could get it included. and they'll get it taken care of for you. That is not a problem whatsoever. Lee says, thank you, Rob. Always great to hang out and listen. Awesome. I appreciate it. Daniel says we've got a breakout on the YM5 right now. All right, I'll take a look at that, Daniel. Butch says, good job, Rob. Let me know when you come to Florida. You're going to come hang out in Chicago, Butch. That's the place to be. Robert, I appreciate it. You have a good day. So, ladies and gentlemen, there you have it. We are done. You have a wonderful day. God bless. Keep your eye on this trade. Watch the YM. As Daniel said, we had a breakout going on right now. Cool breakout, too. And I will see, hopefully, many of you tonight at the E-mini think tank. And for the rest of you, I want to see you in Chicago, guys. Do not miss this opportunity. I've never taught a live one-day on-location workshop before. I don't know when I'm going to do it again. So come on and hang out with us. Take care now, folks. Good day now.